Germany's economic growth has been halved due to financial woes of the rest of Europe. I'm joined down the line today by Neil Prothero, Senior Economist at the Economist Intelligence Unit in London, to discuss the German CPI announcement and what this means for the economy. Neil, thank you for joining me. German annual inflation rose 2% in September. Was the result today expected?
It was, and it was pretty much in line with consensus. Pretty much a reflection of fairly sort of muted price pressures that have been evident in the German economy for a while. Sort of trend in inflation has been downward since the start of the year in Germany. It rebounded a little bit in August, as it did across most of the Eurozone, probably due to an uptick in commodity prices globally, particularly sort of energy and food. So overall, price pressures in Germany still fairly subdued, particularly on the services side. There has been still some upward pressure from energy in particular. And there is a slight concern, I think, going forward on the food price element, given the sort of very poor harvest we've had in quite a few countries globally. And there's concern that this could start to feed through into food prices more broadly in the coming months. But I think overall, looking ahead, the German inflation should probably stay around the 2% level for the next few months at least.
Many analysts have been saying that Germany's growth is grinding to a halt, slashing their GDP forecast for 2013. Would you agree with this?
I would agree in the sense that it's clear that the growth in Germany has been slowing fairly gradually throughout much of this year. In terms of the forecast, we've actually held firm with our forecast both for this year and next year in terms of GDP. Since early this year, we've had 0.8, about 0.8% growth penciled in for this year and next year since then, and we're sort of sticking to that forecast. The German economy, and still relative to what's going on in the Eurozone as a whole, it's still doing okay. It grew in the first half, but the trend, particularly probably since around May, June, has been a gradual weakness in sentiment and in industrial activity, particularly in Germany. A lot of the survey data coming out of the economy has been a lot weaker. In the past few months, we've had some new orders data, which has been quite poor. Industrial production has fallen back. So we're sort of looking at, in Q3 and Q4 this year, of little, if any, growth.
For September, unemployment for Germany rose for a 6th month running. Do you think private consumption can take over as the main growth driver for the German economy?
It's a gradual process that's going on in Germany at the moment. As you say, unemployment has been edging. It's risen for the past 6 months, but it's been rising pretty fairly slowly, and albeit from a very low base level. Still a post-unification low level, an EU harmonised unemployment rate is still around 5.5%, which, when you compare it to the average for the Eurozone, which I think most recent one is 11.3, 11.4%, you can see the German economy is still faring very well in terms of its labour market strength. But it's true that unemployment has been edging up, in part because of the weaker level of activity across the economy as a whole, as we've already mentioned. But I think overall there is a really gradual shift towards slightly increasing consumer spending compared with the German economy where we were 5-10 years ago. But for the moment it's still doing okay with its reliance on the export sector. Should that weaken quite sharply, then at least from a German perspective there is some scope for fiscal stimulus and moves by the government to try to stimulate consumer spending.
Can we just touch on the failed $45 billion project between BAE and the EADS? Many analysts have stated the reasons behind this failed merger is the German government's reluctance. Would you agree with this?
To be honest, I'm not sure that the German government was ever that sort of enamoured by the prospective deal. EADS is the owner of Airbus, and it's quite a strategically important manufacturer for Germany, and so any prospective deal with BAE would have implied some degree of weakening of German control over the company. So it does seem as if they were the ones who have sort of forced through this final decision. On whether talks will resume at some point in the future about the merger, it's possible, I guess, but given the apparent sort of degree of intransigence within Germany to the deal at the moment seems a little unlikely, I think.
The euro fell slightly after today's announcements. Was this expected? And what do you expect to see from the euro in the short term?
Our sort of view on the euro at the moment is quite stable. I think maybe the fall this morning on the euro may have also been related to the downgrade of Spain by S&P overnight. That sort of will also weigh on investor sentiment. I mean, the euro it's actually strengthened gradually in the past few months in trade-weighted terms and against the dollar. It's now up around $1.30 to the euro, whereas it was down around 1.22 2 or 3 months ago. So we sort of see that trend continuing, at least in the short term. There are obviously considerable downside risks should sentiment turn against Spain. I think Spain is probably the key at the moment in terms of whether it agrees imminently to sign up to a prospective bailout deal that will allow the ECB to then start buying that country's bonds. There's some uncertainty over when that could arise, but for the moment, just there seems to be that investors are a little more content now with prospective sort of policy moves going forward in the Eurozone, and that's providing some stability to the currency.
Thank you, Mr. Prothero, for your insights and predictions. Tomorrow on Dukes Copy TV, we have a wrap-up of the week's events with my colleague Monica Gibson. Take care.